we're going to talk about the Keltner channels, and that's a good timing indicator for when you should enter a trade. And the Keltner channels were developed by Chester Keltner and updated by Linda Raschke in the 1980s. I used to live near Linda. I know Linda. She used to live in New Jersey near me, and I knew her in the 1980s. The Keltner channels can help us with our entry and exit points. And they also provide high probability buy and sell signals, which we'll see in a minute. And we can also use those to help select option strike prices, and we'll go through that in a minute. The Keltner channels also allows us to select stocks with repetitive and predictive price patterns. So it can eliminate stocks that don't have repetitive patterns and just stick with the ones that do. So it's another way to narrow down our list of stocks. Now basically the way the Keltner channels work is there's the center channel right here, which is a dotted line, is the 20-day moving average for the stock. And then there's a upper band and there's a lower band. And the distance from the center to the upper band and the distance from the center to the lower band is 2 times the average true range of the past 10 days. So the software calculates the average true range for the last 10 days, and then it multiplies it by 2, and then it plots the upper channel and it plots a lower channel. So this is, I believe this is U.S. Steel. The stock here, the example is U.S. Steel, and I just took this a few days ago, this chart. So we'll see how we can use these Keltner channels. They're very useful. Okay, the way I use this is U.S. Steel, the major trend is up for U.S. Steel. So if it's in an uptrend, what you want to do is buy when the stock drops near the lower channel. And you don't want to buy when it's up near the upper channel. So you can see here's the price got near the lower channel, and you can see you had a pretty good rally here. The stock got near the upper channel and it sold off, got near the lower channel and rallied. And again, you can see normally when it gets near the upper channel, it sells off. When it gets near the bottom channel, it goes up. So it helps you when you're trying to enter a long trade. So let's say I was going to, I did my analysis and trend confirmation, and I'm going to buy U.S. Steel. Well, you don't want to buy when it's up near this channel, the upper channel here. And you do want to buy when it gets down near the lower channel, or if it gets near the middle channel. So this can help you with your timing of when to enter a trade. And also, it can also help. I owned U.S. Steel pretty much since March of last year. And as a matter of fact, on those portfolios I just presented, you'll see it in those portfolios. But right in here, I was thinking of selling, and but I know once it, with a sharp correction like that, I knew once it got near the lower channel, if I hold on, it's probably going to have some kind of a rally, and I'm going to be able to at least get out at a better price. So this is helpful. And here's another here's another example right here where it got down near the lower channel, and I didn't get out because I knew that it would probably rally from there. So this is how I use the Keltner channels to help you time your entry points. Here's the Keltner channels for Visa, and again, when they get near the upper channel, there's usually a sell-off. And then when they get near the bottom channel, that usually rallies. So it's a useful tool to help you time your entries. Here's a chart for Merck, Bucyrus. ExxonMobil. Now, here's an example of one that doesn't have predictive or repetitive price patterns, but it's still the Keltner channels. If you follow them, when it got near the top channel, it did sell off. And when it got near the bottom one, it did rally. So even though it's not in any clear trend, you can still, these were still useful because you can see when it got near the bottom, it rallied, got near the bottom, rallied, got near the bottom, rallied, got near the bottom, rallied. So it's a very useful tool. And now here's an example. ExxonMobil right here is on a sell signal, and the 50-day and 100-day is on a sell signal. The 1 month and 20-month is on a sell signal. So here's an example of the Keltner channels on a stock that's on a sell, and when it gets down to when it's in a price downtrend and it gets near the lower band, it usually will go up to the middle band, and that's when you want to take a short position. You don't want to take it when it's down here, because it's probably going to rally back up again. So if you're looking to short, once it got into this downtrend, if you're looking to short ExxonMobil, wait till it gets up to this middle channel and then take your short position. Because again, if you take it here, it rallied when it got near the lower channel, and it was near the lower channel down here, and again it rallied. So, yes.
I've read in your papers that you don't buy, let's say, 100 shares. You buy maybe 20, and then at a certain point you buy 20 more. Is that when you buy the additional on the intervals of these?
Yes, Hugo is asking about buying in increments, dollar cost averaging into a position, and yes, this can be very useful. Sell in increments. You can use this and take a quarter position or a third position using the Keltner channels. You wait a little bit, see what happens. But I only buy the second position if my first position has a profit. And that's also kind of like a confirmation that you're on the right path. Because if your first position is losing, you don't want to buy the second position. So yes, I think it's a good idea to buy in increments. And I do with my portfolios. I buy in increments. I don't buy everything all at once. And
my question really is, when it's on the lower line, is that the time you buy the additional shares then?
Yes. Yeah. Yeah. Once it gets back down to the lower line, that's when you want to be buying your additional shares. If you already have a position.
Okay,
do you have much credence on double tops and like a double bottom when you get down there?
Charles's question is double tops or double bottoms. I don't really follow those. I just kind of look at the general trend, and if it's down here, I know it's probably going to rally. But to answer your question, no, I don't look for the double tops or double bottoms.
How do these,
Sorry, go ahead.
how does the Keltner compare to Bollinger Bands?
Ree's question is, how does a Keltner compare to the Bollinger Bands? And to answer your question, I just find the Keltner channels more useful than the Bollinger Bands. I don't know why. I think it's because of the 20-day EMA and then the average true range. I think that gives you a better picture. And
Do you wait for a bounce up to confirm that it's going to bounce off the bottom before you enter? Or?
the question is, do you wait for it to bounce up? When it's near the bottom channel, do you wait for a bounce up? And no, I don't. I just use it kind of like a general indicator because I'm not that good. So it's just a general indicator, and it's not good for really short-term timing, for like the next day or two. But I do know that when I had U.S. Steel and it got down near the lower channel, I held my position for several days because I knew that it would probably go back up, and it did. But you can never tell when. So here's the Keltner channels for Goldman Sachs. And again, Goldman Sachs was in an uptrend, and you can see, it bottomed out in March, like a lot of stocks. When it got near the lower channel, of course, it had a big rally. In a strong uptrend, you want to buy when it retraces back to the middle channel, because a lot of times in a strong uptrend, it's not going to get near the bottom. So that the middle channel also is a timing indicator of when you should buy your shares. Now, I want to talk about high probability buy and sell signals. And they occur if the price actually drops below the channel. Now, here's an example of the price. Here's the channel, and you can see the price drop below it, and it was below it for several days. So that's a high probability buy signal right there, whenever the price actually closes below the channel. Because normally it's contained within the two channels. Here's another one right here. It actually got above the channel. It closed above the channel. So that's a high probability sell signal right there. Here's another one. It actually got above the channel and went down. Got above the channel here, went down. Now here it actually closed below the channel, and you got a good buy signal off of it. So, and here's another one. Here's where it closed below the channel, and you got a good buy signal. So if it actually closes above or below the channel, it's a high probability signal. So you want to watch for those. It doesn't occur that often, but if it does, that should pique your interest, because those are high probability signals. This is Merck here, and again, it closed below and then it went up. Closed below, went up. Closed above and went down. And closed above and went down. So closed above and went down. So you always want to be watching for those. And again, you can use this with our trend confirmation indicators to help you enter a trade. And here's ExxonMobil, United Health. And again, you can see these high probability signals. There's one there, and there's one there. There's one there, another one. So you always want to be watching for that, because that's a pretty good indication. Now, you can also use the Keltner channels to help you select strike prices for short-term trading. And I'm going to cover this in more detail in another section coming up. But I was selling monthly call options for U.S. Steel, and trying to take advantage of the time decay, which occurs very rapidly the last month of it before option expiration. So I was buying the stock, selling the 1-month calls, and I was using the Keltner channels to help select the strike price. So if I owned the stock here, and let's say option expiration was about in the middle of the month right there, I wouldn't want to get an out-of-the-money call right there because the odds are it's going to go down. So I would select an in-the-money call with a lot of downside protection right there. Now, the next month, if it's down here at option expiration, then I could do an out-of-the-money call because I know that the odds are it's gonna trade back up again. So you can use this just as a general indication of whether you should trade in the money or out of the money options for short-term trading.
Do you do in the money option then most of the time?
The question is, do I do an in the money? I would do an in the money whenever the price is up near this upper channel, because the odds are that it's going to go down from there. And if you have it in the money, you're going to have a lot more protection. So the idea is when it's near the upper band, you want to sell an in the money call that gives you more protection because the odds are the stock's going down. And if it's near the lower band, here and here, then you want to buy an out of the money because the odds are it's going to rally from there, and the out of the money would be more profitable.
Chuck?
Yeah.
Excuse me. The Keltner band, that's available by what?
That's available on stockcharts.com. Yeah, you just,
Thank you.
it's one of the indicators. You'll have like Bollinger Bands and percent R and oscillators, and you just select Keltner bands and found those to be very useful. You can also use the Keltner channels to help you select stocks with repetitive and predictive price patterns. In other words, with ABC, Amerisource, you can see these are fairly predictable price patterns here. Whenever it gets up near the upper band, it usually goes down to the middle channel. So here's and then when it gets to the middle channel, it usually goes back up to the upper channel. So here it hit the middle, went back up, hit the middle, went back up, hit the middle, went back up, and so on and so forth. So that, to me, is I would rather trade this stock than this one, where you can't really get a sense of where you should be entering and exiting because there is no predictive price pattern. So the Keltner channels are real good in, again, further narrowing down your list of stocks to look at if they're in a fairly predictable price pattern. So it's helpful in that sense also.
What stock is the top one?
Top one is Amerisource. That's healthcare. And the top one is Intuitive Surgical. So again, that has repetitive patterns that you can see, and when it's in an uptrend, usually when it hits the upper channel, it retraces back to the middle channel, and then when it hits the middle channel, it retraces back to the upper channel. So that's pretty indicative of a price uptrend and a repetitive pattern there. And again, here's a stock that I would avoid just because there is no predictability. So it's another tool to use to help narrow down our list.